Good morning, folks. Hope everyone out there is having a good start to their week. So we're going to dive in to some futures, to some stocks. We're going to be looking at stuff using Bookmap Pro to zoom in on the order flow at a more granular level. And I think that'll be pretty fun. It's an interesting setup for today. Of course, last night we saw China's markets reopen and they popped, but Hong Kong dropped as the reality was that we didn't get the kind of stimulus that was wanted over there. So some of those stocks could take a bit of a hit this morning as well. So let's get right into it here. And as I'm broadcasting, if you have any questions about anything you're seeing, do let me know. Always happy to help. Want to make sure that this is a helpful experience for all those tuned in, that you understand what you're seeing on the screen and that it can help with your trading process. So with that being said, let's get right to it here. First, no presentation would be complete without the general disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. And a little bit about me. I started trading in 2005. I started investing my profits from trading in 2006. And I did go through the great financial crisis. It was a huge learning experience for me. I was able to get out of the way, but not because I saw the crisis coming in advance, more because I just trusted my process. I saw technicals starting to stall out and I got out of the way. And I saw what later unraveled, and it was a pretty alarming and eye-opening experience, to say the least. And it gave me a greater appreciation for how important momentum, macro, order flow, volume profile, how everything sort of fits together to create what ended up being the system in which I really trade off of, particularly over longer time frames. So my own approach, having learned from that and really just sharpened my skills over the years, is focused on a systematic approach. I don't do as much discretionary trading, although I do some. And my systematic approach is driven by momentum, price action, options flows, sentiment, positioning, volume profile, and of course the big picture, what some folks like to call macro. Although I feel like macro's earned a bad name, even though it's funny, a lot of the folks that ditch macro or diss on it often use macro in their process without even realizing it. So, whatever one may think of that, that's always a little amusing. But anyhow, I began working with Bookmap in early 2022. I saw the great value in the way that the platform displays market data. They also added in icebergs and stops for futures contracts on Rhythmic, which has been really, really helpful. I've also built some tools on top of Bookmap, my options visualizer, exhaustion and aggressive absorption indicators that have helped me find turning points during the trading day. And I co-founded TraderAid in January of 2022 and Macrovisor in early 2023 to share my experience, ideas on market opportunities, and education. TraderAid's really about shorter time horizons to intermediate time horizons. We've got a whole host of cutting-edge trading tools, but also education, actionable ideas, and an amazing community. If any of the members are tuned in right now, shout outs to y'all. Y'all are awesome. And then we founded Macrovisor in 2023, more focusing on long-term trading and investing, using that top-down macro-driven process and using momentum to qualify some of these opportunities on a swing time horizon. I also build a number of unique tools and models, and I provide one-on-one coaching. And right now, there is an exclusive deal available. You can get up to 40% off of Bookmap plans by visiting traderaid.com/bookmap. That's traderaid.com/bookmap. Scroll down to the specials area for those discounted plans. And consider joining us on the Bookmap Discord. You can do so by scanning the QR code on screen or visiting the website discord.com/invite/bookmap. So with all that being said, we're going to now dive right into Bookmap. On screen, we've got the S&P 500 futures contract as we are just about 23 minutes away from the start of the trading day here. And it could be pretty interesting, the trading day ahead. We've got a decent calendar here. Let's look at some of the things that are coming up. So we've got Fed's Bostic, we have EIA, some of the data coming out from them, and then we also have a 3-year note auction, which will be probably the most important event of the day. We've seen the 2-year yield drop significantly and then start to push higher, nearing 4%. It is going to be a litmus test of demand for the shorter end of the yield curve, and also it'll give us some sense as to what the market is thinking of Fed policy at this point, since the 3-year is so close to the 2, and the 2 is a good way of really getting a sense as to what the market's expectations are for Fed policy from here. And this is a week with lots of Fed speakers. So we've got Bostic, Collins, and Jefferson today. Earlier we had Kugler as well, or Kugler, whatever their name may be. So this morning we're seeing futures getting bid up a little bit. S&P futures up just about 1/3%, as well as NASDAQ. Dow and Russell up just over 1/10% going into this trading day. And the order book remains pretty illiquid on S&P. Yesterday, it was between 35 and 40,000 order book depth. This morning, you can see it's about 39,000 order book depth ahead of the market open. So it's still an environment where using wider stops and being much more careful about trade selection and smaller size in those positions, because you have to realize the risk of wider stops, all makes sense. And folks, as I'm broadcasting here, if you do have any questions about anything, let me know. And as we approach the trading day here, we're going to take a look at some of the markets, what all is going on out there. So on screen, we've got the S&P. We saw a little bit of passive selling just now, about 500 sell-side orders in 2 icebergs. Nothing too significant, but it is worth watching. We did see some decent passive selling yesterday as well. And that ended up being a place where we saw the market kind of make some turns lower when we saw passive sellers become aggressive enough. So we will be watching those passive sellers today as well. And I do tune my icebergs up so that on screen you're only seeing the ones that are either open orders or at least a little bit more noteworthy. So let's move over to our friend, the NASDAQ, getting a little bit of a bid up here to the point of control in yellow. You can zoom out and see there's not a ton of interesting resting liquidity levels yet. And the NASDAQ is also a pretty illiquid contract right now, just trading about 6.1 thousand order book depth. Russell trading just around the point of control here, also an illiquid contract, trading just about 4.2 thousand order book depth. And then you've got the 10-year note futures. Interesting to see a bit of pressure on those overnight from the European session. We've seen rates pushing higher recently. That's helped to give a bid to the dollar as well. One of the trades I've liked as a result of me feeling like rates had sort of bottomed out, and so had the dollar as a result, was long dollar, short yen. That seems to have been a pretty good trade so far. I still think it has some room to go. The momentum in the yen is turning lower, and really rates are a great place to watch for where that trade can go. Because if you watch the 10-year note futures, you'll notice that they tend to have a pretty good leading relationship with the dollar. So if the 10-year is getting sold down, the dollar tends to get a bid because the dollar's, moving with rates. Higher rates tend to give a bid to our currency here. And the same is true if the 10-year has a big bid and it's moving higher in futures. You see rates moving lower, that tends to pressure the dollar lower as well. That's another reason why that 3-year note auction could be important, because it could have some impact on the rates complex as a whole. We've got gold on screen. Let's just zoom this out a bit. You can see we had a decent bid from the European Open, but now we're starting to sell down a little bit. Gold has been doing a bit of a stair-step pattern. It's actually a pretty healthy pattern overall. If you trade gold and you have been trading gold for some time, you're probably used to it trading one of two ways, either stair steps like it is right now, or just straight parabolic. And as we know over time, things that move parabolically higher tend not to last. So I'm actually pretty encouraged to see gold just sort of stair stepping. This is this steady accumulation. Nothing yet to really be concerned about. We see a little bit of consolidation over the last week and a half or so. That is to be expected in gold. I'd really like to see silver do better overall, but gold is telling us that there's greater global uncertainty, and that provides a bid under it. So as long as that's going on, I think gold has a bid. I really don't want to see it go much below 2646, or I think we're going to start to kind of build a larger consolidation range, right? Then that opens up downside to 2610, possibly 2560. But I'm still constructive of gold going into next year. I think we're going to get to $3,000 an ounce probably by the first half of next year. So we'll be watching gold. It is an interesting benchmark of just overall market uncertainty. Then let's take a look at some of the majors. As we get into the trading day, we can see Apple has just a bit of a pre-market bid here. Amazon overnight, pretty flat overall compared to Apple. We'll see how some of the mega caps do in this trading session, as the NASDAQ is set to open with less of a bid than the S&P. Google also pretty flat ahead of the open here, or Alphabet, whatever one likes to call them these days. Meta also pretty flat overall. This one has been having a pretty incredible run this year, though, so perhaps it needs to catch its breath. And Microsoft ahead of the open, actually not looking good at all. Maybe there was some news here on this one, but we saw that bit of a gappy downward flow earlier. So we'll be watching Microsoft with some level of interest. NVIDIA, wow, we're seeing it take out that 130 level again pre-market, and there's been a pretty steady bid. They had an AI conference yesterday. The CEO last week was on the news talking about insane demand for Blackwell and that they could meet their production targets of having these coming out in the fourth quarter, this quarter of this year. And we don't see any too really large offer areas yet. 135 is the largest on book. That's 221, but it's not unusual for this thing to have millions of shares on offer. So we'll see what it looks like after the cash open. We do know 130 through 133 are areas of large options interest. And in fact, that's what helped to push this thing to 130 yesterday. So we do see a bit of a bid coming in to NVIDIA pre-market. And Tesla, modest bid from the European Open. And I'm going to just add a few Chinese stocks because I feel like it could be kind of interesting to watch things like BABA today. So bear with me. So I'll add BABA and JD for fun. And I need to do a little bit of tuning up on these. So give me a moment. All right, there we go. So we've got JD and Baba to watch. I'll probably throw FXI in here as well. And we won't need the stops and icebergs on JD because it doesn't use that sort of data set. All right, so let's see if we can throw in FXI as well. All right, very good. So we've got those. We'll be checking back on those after market open, but right now we do see some pressure in those Chinese equities ahead of the open. Hong Kong was down the most since I think during the great financial crisis 2008 or so last night. So FXI has an implied open of 33.39 right now. That's down 9%. So that is reasonably chunky downside implied in FXI here. Similarly, we're seeing that in Baba. Baba ahead of the open is implied down 7.14%, and JD.com is implied down about 9% ahead of the open. Hey, Sam, how's it going? Thanks for tuning in. And we see just a little bit of passive buying here. We're about 10 minutes away from the market open. S&P futures trading 57.69 with cash implied to open up 0.43%. NASDAQ bid up about 0.47%. So it's starting to really catch up to the S&P a little more here. Dow and small caps and the Russell 2000 bid up just about 0.14 and 0.16% respectively. And VIX trading spot 2170 down 3.84% ahead of the open. And recapping going into today, we did see Chinese markets reopen last night after their holiday week wrapped up. And we did not get signs of the level of stimulus that I think investors were looking for. And I think that's one reason we're seeing some of that selling pressure. It's also one reason to be really careful with China. And the reason I'm getting on my soapbox about this now is because I've tried to gently caution people about this for some time, really at this point for years, because it's just been one head fake after another with China. They just tend to sort of talk about, oh, we're going to stimulate, and then they don't in any reasonable size. And it's been a theme for some time that they talk a big game and then nothing really comes of it. So you get all this speculation, it ramps up, then you get the disappointment, and everything turns on its head. And of course, for folks in the US, if you're trading Chinese ADRs, this is happening overnight while most of us are sleeping. So then you wake up to a giant down day. And most of the time, your stops aren't really going to protect you much, right? Because even if you're able to access those overnight trading venues that let you trade US listed shares. It's not very liquid. So you're not necessarily going to get a good fill on places like Robinhood or Interactive Brokers or whatever else that might have that sort of 23-hour trading on US stocks or US listed stocks, the Chinese ADR. So I think it is important to be real careful with that stuff. We've seen 2 years of promises by the Chinese Communist Party to stimulate, and we've seen 2 years of disappointment, one after the other, where the stimulus measures come out woefully insufficient versus what the market was anticipating or trying to price in. So the message that's being sent today is the Chinese Communist Party needs to do more, that she needs to take this seriously if there's going to be a rebound in economic activity. That's really the only way that we see some multiple expansion in China, particularly after this enormous rally. And without, sadly, the amount of stimulus that was needed to justify that kind of rally. So a lot of folks could be caught on the wrong side of this thing. And that's, again, why I sort of wanted to post some of the charts showing skew getting wildly bullish on things like BABA, Pinduoduo, JD, NEO, FXI, KWeb, and other Chinese ETFs and equities, because this thing got wildly out of control. And it was pure speculation, and it was happening while their markets were closed. And that was the part that was the most extraordinary about it. You don't have the actual Chinese markets open, and people are flooding into these things, buying, enormous amounts of call exposure to the point that skew got wildly distorted to the bullish side. And that creates a lot more overhead supply, right? That means when you get into the trading day and options are trading, you've got all those options decaying. And if they're moving away from price, you've got even more flows from market makers removing their hedges as deltas are dropping. And what that means is it's liquidity negative. It means there's more selling pressure. There's more supply overhead in these things. So, folks, be careful out there. The Chinese government has a really bad habit of not treating foreign investor capital well. I'm just going to pop this on screen just to illustrate that point. We'll just remove all these drawings. We'll bring this out to a monthly chart. And we can see, going back in time, the Chinese markets, since the FXI ETF was listed, they've just basically chopped sideways. There really hasn't, if you look at any other market during this time period, really, it's generally done better. But China's just basically gone sideways for this whole time. And there was some research put out, some bank research put out about China recently as well, talking about how, if it's anything like Japan, their valuations can actually get cheaper and their market could languish for quite a bit longer before there is any kind of recovery. And the government really does need to do more to stimulate the broader economy and to alleviate the stress on their $62 trillion real estate market. So I'm going to get off my soapbox about China, but I just wanted to send that out there because I've seen a lot of folks that could get hurt in this following, I guess, social media accounts or rumors or, some of the financial media coverage about this being the next big bull market. Maybe someday it will be, but my viewpoint on this has been pretty steady that yes, there's going to be great trading opportunities in here if you're nimble, but it's not investable yet. And it may not be investable for quite a long time. So shifting back to U.S. markets and futures, it's about 4 minutes from the market open. It's 9:25 Eastern and several seconds. We're watching S&P futures here and NASDAQ. They're just sort of chopping sideways as we get ahead of the market open here. We have S&P futures order book depth about 41,000, so a little better than where we were yesterday at this time. We'll see how that shapes up in the first half hour or so of trading. I'll be live until 10 a.m. Eastern. I come on every Tuesday from 9 a.m. to 10 a.m. So definitely tune in. You can watch on the Bookmap YouTube, on Twitter, or on my YouTube. And you can also tune in on the Bookmap Discord directly, where you can have real-time access to the stream and the amazing crew at Bookmap. And folks, if you have any questions throughout the stream, do let me know. Let's just take a quick look around here as we get closer to the market open. Apple continuing to move sideways, as is Amazon. Some volatility here in BABA as we approach the market open. I think this one's going to be a pretty choppy trader today. Google continuing to move sideways here, as is FXI, moving just a little bit lower to sideways. JD pretty much consolidating, as is Meta. Microsoft had that gap down earlier, starting to show that it has some interest higher here. You can see some of that liquidity building above. And NVIDIA, wow, look at the choppiness of this thing. It is just all over the map pre-market. That's pretty incredible, honestly. Looks more like a constellation of satellites or planets or something more than a stock chart with the way it's moving so erratically. And then there's Tesla continuing to consolidate sideways here. NASDAQ's got a bit of a bid over the last 15 minutes. Russell 2000 does as well, just starting to build above that point of control. And rates pretty much steady here, seeing some iceberg selling. And finally, we've got gold here starting to move even further to the downside. And I'm just going to bring crude on screen here. I need to clean up the chart, so give me a moment. We do see some aggressive buying coming into S&P. Getting some pings from my ES aggression indicator here. Less than a minute from the market open. And we do have elevated skew. So buybacks are on pause right now, which does take some of that passive liquidity away. But on the other side of it, it's almost like handing off the baton in a marathon. You've got pretty elevated skew, and that put decay in the S&P 500 index options is likely to drive some liquidity into S&P futures during the first hour of trading and the last hour of trading. So that could be liquidity positive, could add a bit of a bid into that first hour, especially as we approach OPEX. Market open imbalance, about 21 million to the buy side on S&P, 16 million to the sell side on NASDAQ, 12 million to the sell side on Dow, and 17 million to the sell side on Mag 7. Pretty neutral market on open imbalance overall. China's premier now saying all sides should actively roll out policy measures to stabilize growth. That's a interesting statement, and it's being said pretty late there. But I guess they weren't super thrilled with the reaction they saw to the initial lack of doing enough. So there is that. Seeing another bit of passive sellers here, just some open passive sell orders or icebergs above futures. On S&P, we started off with a bit of a pop, but we do see a little bit of selling pressure coming in now. Let's take a look at what's going on in the NASDAQ. Pretty similar look overall. Pop and then some selling, now starting to get a little bit more interest back in. Russell's just selling down. There is some attempt by buyers to absorb that selling pressure, as we can see in those green delta bubbles, which are showing there is a decent amount of buying transacting. But nevertheless, sellers seem to have plenty of supply so far. So small caps kind of taking it on the chin on the open, getting a bit of a pop off their lows. Rates continuing to move sideways. Gold just off its lows here. And crude, even though Milton is a Category 5 hurricane that is already shutting down production in the Gulf, we do have crude down over 2% this morning, down actually over 3% this morning, and trying to come off those lows here. Apple getting a bit of a sell on the open. Amazon, bit of a sell on the open as well. Seeing a fair amount of supply building overhead between 182.75 and 183, and some demand down there at 180 with 75,000 on bid. BABA, wow, look at this thing. It's just all over the map. It's already traded a $2 range and the market's just opened. And we do see some pretty chunky call flow coming into Tesla, targeting the 250 strike with about $500,000 of premium for this Friday's expiration. So let's just quickly check on Tesla. Yes, we do have that bid in Tesla as well. So, you know, Tesla's been a really popular optionable stock. It's seen enormous flows, and today is no difference. Again, targeting the 250 strike for this Friday, over $500,000 of premium paid for that call. And we can see the stock reacting positively to that flow that started just a minute after the market opened. So basically right here, right as the stock was getting bid. And this is one of the reasons we auto watch flow, because it does have a pretty strong impact on price discovery, a pretty direct impact on price discovery. So let's move back, look at some of these other stocks. Alphabet just consolidating off the open here. Seeing a decent amount of demand down here at 163 with 26,682 shares on bid. FXI popping a bit off the open, but overall pretty sideways. JD looking pretty volatile. Got a pop off the open. Well, got a drop off the open, as we can see here. Then a pop. Now just settling down to that point of control. All these stocks, however, these Chinese ADRs in the U.S., trading lower today. JD now down 8.56%. Meta is pretty sluggish, dropping a bit off the open and consolidating. Microsoft dropped off the open, popped a bit, now getting back down below the point of control and testing VWAP. And NVIDIA, you can't stop this thing. It is just continuing to try to make this push higher here. And we've got a decent amount of supply here at 131, 331,000 shares on offer, but 132, a bigger level with 550,367 shares on offer, and that level just continues to grow. Seeing some calls come through SNOW, SNOW, targeting the 115 strike for November 15th. That's 315,000 premium paid. Let's move back to S&P here. We can see S&P just starting to grind lower a little bit more here. That implied passive bid at the open from decaying S&P options doesn't necessarily mean we're going to just go higher automatically, but it does help to buffer downside if we open with more selling pressure. So that's likely a bit of what we're seeing here. It can also add some degree of volatility to that first hour of trading. So, folks, let's talk a little bit more about what we're seeing on screen with Bookmap. I'm just going to kind of segue to talking about what all of this graphic information means, because I've had some questions in the chat. So this is a heat map on screen, and what you're seeing with the colors that are warmer, the yellows, oranges, and reds, those are areas where there's liquidity on offer, right? So everything to the right of this white line is where we are currently. And to the left is historic, and we're going back about, right now, about 40 minutes, right, in this timeline. So this is where there is interest in transacting, and this is where there has been interest. You can see it also in the current order book. The current order book shows you these levels in more granular terms. They're all broken out with the numbers correlating to each area of offered liquidity in red, right? And where there is a bid in green. SVP is a session volume profile. So you're seeing where there's already been transacting. So if you think about it, the current order book is where there's interest in transacting. The session volume profile is where there's already been transacting. So that can help to sort of contextualize what you're seeing. These green areas on the session volume profile, those are buy-side deltas. That's where buying order flow has exceeded selling order flow. And the red is the opposite. That's where selling order flow has exceeded buying order flow. Okay? So that kind of helps to give a little bit of a sense as to what you're seeing on screen. But let's dive a little further in. This red line on top, that's the highest price level since the market open. The green is the lowest price level since the market open. So we can see already we're able to get a sense as to what the opening range is using these highs and lows. It's about a 9-handle opening range so far on S&P futures. Then we have these diamonds, right? These are iceberg orders. They're still open. They're still overhead here. There's about 30 contracts that have transacted so far. And we're watching those because it's implying that there is still some supply overhead just below 57.70. This yellow line is the point of control. So that is showing you basically above that, buyers have an advantage based on volume profile. Below that, sellers have an advantage, and we are starting to push below it. And then the white line here is the volume weighted average price. And these bars below aren't just normal volume bars. They're actually delta volume. So it's just showing you which side was essentially the larger player during that volume bar. Finally, we have up here, this is the amount of total liquidity on offer. That's 18,000 contracts. Then this is the amount of liquidity on bid. That's 23,000 contracts. You add them together, you get the order book depth. So right now, that's looking like 41,000 order book depth. That's not incredibly liquid, so it does mean it's important to be careful about position size because wider stops are kind of necessary in an environment where it doesn't take too much volume to move price. And then we have the subchart. This shows you accumulated icebergs in the light blue, stops in red, and then we have the cumulative volume delta. And I'm actually going to just really quickly modify one thing here. There we go. Just to simplify that subchart a bit. And we do see the market starting to press to new lows. Let's get a sense as to where all this is coming from. Look around some of these other markets. NASDAQ's been pretty choppy here. Not quite at new lows yet, but looks pretty close to it, just testing the point of control. Russell 2000 also getting to new lows recently, sort of like the S&P 500. And carving out a reasonably chunky opening range so far, just about 10 points. Rates just moving sideways here. Gold also similarly moving sideways, just consolidating some of these recent losses. Crude oil continuing to move lower here, making new cash session lows in the CL contract. And we do see just a smattering of passive selling on any of these little episodic spikes in price. So seems like there is a desk out there that wants to try to sell down some of those spikes. And we're also finally starting to see some passive buyers come in here on that last little move lower. Apple consolidating and starting to push higher, just testing the point of control, making new cash session highs recently, trading 224.46. Amazon also making new cash session highs recently. Perhaps these are helping to explain why the NASDAQ is a little bit more resilient than the S&P so far. And it is trading above its VWAP and point of control with reasonable amount of supply here between 182.90 and 183. Between the two, just about 60,000, 63,000 on offer. BABA, very volatile here. The Chinese stock trading down about 6.38%. As I noted earlier and last night on Twitter, the call skew on this one is pretty extreme, right? So that just gives you a sense that there is a lot of folks out there looking for further upside. And there's a pretty high barrier to cross for that to happen, particularly now that we're seeing price move in the other direction. Alphabet shares actually moving lower, unlike Apple and Amazon, this one making new lows. Chunky level of demand here at 163 with 27,306 shares on bid. FXI moving higher off of its open, but just consolidating some of these losses. This is a stock that is trading down about ETF is trading down about 8.2% so far. And JD up off of its opening levels, testing that point of control twice and bouncing off of it. So looking good from the lows, but down 7.35%. Chunky level of offer at $44, 29,381 shares on offer there. Currently trading $43.63. Meta consolidating sideways. Not much to see here on this stock so far. I've got a chunky amount of offered shares, just around 600. And Microsoft also consolidating after dropping and then popping from the open, trading 411.11, just around the point of control. And not a lot of noteworthy supply and demand until you get down to 400, where there's 108,000 shares on bid. And then 405, decent amount, 24,000 shares on bid there. Moving higher, 420, this has been a key level for the stock, largely based on options positioning. At 420, I guess just being a magic number to a lot of people out there, 19,000 shares on offer. NVIDIA struggling below that 131 level of offered shares. You got 424,000 on offer there, then 132 with 625,000, and 133 with 333,000. This has a lot to do with options. There is this rolling up of exposure in NVIDIA to these levels. And so we do often see market makers take the other side in the shares. And indeed, we can see these levels are pretty large areas of offered liquidity in NVIDIA as it recaptures 130 and trades above the point of control in VWAP and then consolidates here. Tesla got close to that 250 strike we saw earlier in the flow, but really couldn't get to it. Starting to see some downward pressure now, trading closer to the lows of the day, around 242.37. And we do see some NVIDIA put flow, if such a thing is even legal these days. Looking for the 130 puts for this Friday, about 357,000 in premium pay there. So nothing too aggressive, but nevertheless, that is a flow that just came over that caught my attention here. And Tesla just trading to new lows. Hey, Mac, what's up? And folks, if you're interested in what we're doing over at TraderAid, you're welcome to check us out. We've got a 3-day free trial on the Discord. If you visit whop.com/TraderAid, that's WHOP.com/TraderAid, you can check out what we've got. Some pretty cool cutting edge tools, trading ideas, educational resources, and an amazing community of traders. And we should start to see some of the SPX options visualizer flows coming through shortly. We can see the levels that it's mapped out. This is a tool that I created. It's an algorithm that I wrote just analyzing SPX options over time. I used to do a lot of this by hand. And then I said, you know what, I should automate this because I'm lazy and I would rather have a routine do it for me. And so I took it to the next level rather than just doing positioning. Now we can start to see flow is also coming on. And this is updated just about every minute throughout the trading day. So this is the SPX options visualizer. It is a plugin for Bookmap available at TraderAid.com/SPX. It's also something that we have available during our educational streams on the Discord and through our bot named Gur that can show some of these levels. So it's pretty cool because options really drive the market. And I'm actually creating more and more of these tools. So we'll have them for NVIDIA, for Tesla, for some of the most popular optionable stocks and ETFs out there, QQQ, SPY, etc., as we go on. But we can see right now the most active options are trading higher And let me just get the key levels here from my friendly Discord bot who is kind enough to put them out for me. So the hot call right now trading about 1,000 at ES 5798.75. And the warm call trading 927 contracts at 5823.75. So we are seeing a lot of interest higher here so far. And options are a pretty big player, especially in a market that's trading with an order book depth of just 41,000. So worth watching how this evolves. We're trading just around the implied gamma flip level from my naive model and just above this key volatility trigger level, which would be about S&P 5,700, wouldn't you know it? Got about 11 minutes left in the stream here. Hope this has been helpful for you all. Of course, if you have any questions, let me know. I tried to run through both what I'm looking at in Bookmap and what it means, but I know that's a lot to take in. That's why I do recommend coming back on Tuesday at 9 a.m., checking out the stream as we go week over week. You can also check out my past streams on the Bookmap YouTube or my YouTube. And you can check out the Bookmap Discord and their YouTube as well, because they've got a lot of great educational content talking more about how this piece of software works. And I find it to be quite invaluable for short-term trading to be able to look at the flow in such a granular way. Seeing some aggressive call flow coming into JD. That's the Chinese stock we have up here, targeting the 45 strike for this Friday, about 300,000 in premium paid. And we can see that's a decent level of supply overhead as well. Just take a look here. There's my Bitcoin chart. I was wondering where that one went. So I'll give it a moment to sort of fill in all this historic data, but definitely want to keep that one on here. It's a good proxy or heuristic for risk appetite. And there we go. We can pull it back a little bit just to see that there has been a pretty decent bid off the European market open in Bitcoin into the present, and certainly off the US market open as well. And then I'll just hit the time slice, bring it back to about a 20-minute time frame, and we'll start looking around some of these other markets again. S&P is just sort of consolidating here. There's a decent amount of open sell side orders here, these iceberg orders that are continuing to transact. We saw 1,000 contracts sold at open in 2 orders. We've seen about 316 in 2 orders sold recently. Seeing some passive buyers starting to come back in here. Seems like a somewhat indecisive market so far. S&P bid up just over 1/3%. NASDAQ bid up about 0.5%. Small caps down 1/3%. Dow down just over 0.1%. Spot vol, VIX is 21.79, down 3.44%. And seeing gold about flat on the day here. Silver down 1.78%, copper down 2.24%, and platinum down 1.38%. And a bit of a pop in yields overall, led by the 30s and the 10s, which are each rising by about 0.6% from yesterday's yield levels. 2-year note, however, down about 1/3% in its own yield, down about it's down about a bip here. And we can see some of those options flows continuing to build here. So let's just go over some of those levels again. Most active call strike targeting 57.9875. Second most active targeting 57.9375 in ES terms. That, if we're looking at it in SPX terms, is 57.50 and 57.45. The most active puts targeting 57.48.75 and 57.68.75. In SPX terms, that's 5700 and 5720. So these are updated as we see the flows coming through. They're somewhat balanced right now. There's not a huge disparity between the calls and the puts in terms of the total amount of flow, which is one reason we're probably sort of balanced right now, sort of consolidating rather than making a very decisive move, but worth watching these as the day progresses. Order book depth remains pretty illiquid here at 41,000. And Apple getting a nice little pop here, taking out that 225 level of offered liquidity. There was over 30,000 shares there. And it's churning right through it. Decent amount of demand. Amazon continuing to consolidate sideways, but pushing into that next layer of offered liquidity. Baba falling here, actually making new lows on the day, now down 7.3% on Baba. Alphabet shares just stair-stepping lower here. You've got a decent amount of demand at 163 that may offer some support. FXI starting to stair-step lower as well. Down 9.1% on FXI. JD just consolidating here. We talked about some of the flows we were seeing earlier in that stock chart, targeting the 45 strike. Meta consolidating, not much to see here. Large offers around 600. Microsoft off its lows, making new cash session highs here, starting to climb, trading 413.53. And NVIDIA consolidating above that 130, above the point of control in VWAP so far. And Tesla, after making new lows recently, bouncing off those lows, looks content to test the VWAP and point of control convergence area from below, where there's a large sell side delta just above that as well. We saw a little bit of aggressive buying coming into S&P futures. There was a small stop run there as well. About 130 contracts stopped out. I see some flows coming into MSTR. That's MicroStrategy, targeting a 210 strike for November 1st with 206,000 of premium on the call side. Jamie Dimon coming out saying deficits are inflationary and need to be dealt with. The Fed was right to take the foot off the gas with a 50 bip cut. I would think that would be them putting their foot on the gas with a 50 bip cut, but maybe I'm missing something. He goes on to say soft landings are difficult. I hope it happens, but not assured. Interesting. So he's saying deficits are inflationary, but the Fed did the right thing by cutting. I see that as a bit of a conflict, but, you know, he's been kind of perennially negative or pessimistic about where this all goes. It seems like he's starting to turn the page just a little bit. That's Jamie Dimon, JP Morgan CEO, with some of his thoughts on the broader economy. Seeing a larger stop run there on S&P futures, 562 contracts stopped out so far. Seeing some passive sellers come back in here. Interest in calls is building now. That hot call strike trading at 4,000 contracts at that level. So certainly seeing a bit of the interest on the option side help to drive price higher. NASDAQ also grinding higher here, seeing some stop runs on the way up, some attempt by passive sellers to try to take some profits off the table or even layer some shorts in. Russell continues to look rather poor, just challenging the point of control from below, but recently making new lows. Gold continues to consolidate. Bitcoin consolidating its recent gains here. Crude oil making new lows recently, now trading 74.40, down over 3% as Milton approaches landfall later this week. It is already disrupting production in the Gulf. Apple making new highs recently, trading 225.09. Large supply at 226, about 457 now shares on offer. Amazon getting into this next area of offers just around 182.90 to 183 and making new highs on the day here, trading 182.62. BABA off of its lows here, but really volatile trading in these Chinese stocks this morning. Now trading 109.04. And Alphabet challenging its VWAP level, and just below the point of control, there's this large sell side delta here, just around 163.85 as well, worth watching. FXI continuing to grind lower here, down 9.4%. Nasty business in China today, as their markets reopen and a lot of that speculative excess that happened while they were closed is being wiped away. JD trading sideways, about 43.68. Those flows earlier into calls, not pushing the dial too much with so much skew to the call side as it is. And Meta trading close to session highs, above VWAP, below point of control. There's this large buy side delta just at about 590, worth watching as a potential area of further supply. And Microsoft trading towards session highs recently and then stalling out, consolidating a bit here. NVIDIA trading just above 130 at 130.54, above its point of control in VWAP. Large supply at 131, just about 480,000 shares on offer, and 132, 660,000 shares on offer. Tesla getting rejected at the point of control, now trading below that and VWAP, seeing some supply coming in at 242 and a larger supply area at 240 with 59,000 shares on bid. Seeing Mara get some call activity here, just many of the Bitcoin adjacent stocks getting some interesting flows. This is targeting the 18 strike for December 20th on the call side, 222,000 in premium paid for that one. S&P futures starting to grind towards new highs on the session. S&P now up about 0.6%. NASDAQ up about 0.9%. Small caps turning positive now, up 0.1%. Dow about flat here. And folks, that's going to do it for today's stream. I would say that overall the path of least resistance seems to be higher in U.S. stocks. We did break out of that 20-minute opening range to the upside. We do see call flow outpacing put flow in SPX, and we also see that in single stocks and ETFs. So even though that what's going on in China isn't great, you'll note that on the way up, it didn't really have a big impact on U.S. markets. On the way down, it doesn't seem to be having a big impact on U.S. markets either. So we kind of trading a little bit separately from each other, at least for now. But I would continue to watch that options flow in SPX, as well as some of the unusual flows in ETFs and single stocks in the U.S. to get a sense as to what is really pulling this market around, because it remains illiquid. The order book depth is just 41,000 on ES, which is pretty low. So wherever the flow is going, that's really going to pull this market around from by the nose. And right now that flow is heading more into calls. It looks more constructive, more bullish overall. You can see the top two calls, 11,000 in volume. The top two puts, 8,000 in volume. So the calls have it for now. Put call ratio also favoring calls here, at least so far in the S&P 500. So looking for that path of least resistance to be higher, at least till we get to that hot call strike. So if we talk about that right now, currently that hot call is 57.9875 in ES. We look at that in SPX terms, it's 57.50. So wishing you all a great trading day ahead. If you enjoyed this stream, feel free to give it a like, subscribe to the Bookmap YouTube or my YouTube, wherever you're watching it. Consider following me on Twitter. My name is Mayhem4Markets. That's Mayhem number 4 Markets. Check out TraderAid to learn more about the tools, trading ideas, and education in our amazing community. And check out MacroVisor for more ideas on longer time frames. And finally, if you want to get your own copy of Bookmap for up to 40% off, visit traderaid.com/bookmap and scroll down to the specials. Wishing you all a great trading week ahead. And if you're in any of the areas impacted by Milton, wishing you, your friends, and your family safety during this time.